Hello and greetings from Frankfurt Main Tower. This is Helavar's quarterly update and outlook for the Euro markets with a special focus on our favorite product, covered bonds. I've brought with me today again Matthias Melms.
Hi Thomas.
Who is in charge of DCM and Syndicate. I'm Thomas Kors. I run the financial institutions business there. And I was quite impressed by the first quarter. What a quarter it was. We have seen record issuance, almost 600 billion euros worth of bonds coming from corporates, SSAs and financials. We had the financials dominate the market for the first time in quite a while in March this year, so last month. And we had a top start already just in the run up to Easter in April as well, with 10 billion being issued. It's an amazing time. And we had some troubles in the markets despite. So Matthias, what's your take on the first quarter overall?
Yeah, fantastic beginning of the year. For example, in covered bonds, we have seen the highest issuance volume in January for a long time. After that, also in February and March were excellent months until SVB and Credit Suisse. Then the market was more or less close at the end of the quarter, but up to then.
Credit Suisse, that rings a bell. They did issue their first euro covered bond also at the end of last year, correct?
Yeah, it was in November.
And that bond performed still.
Despite the trouble that we have seen with SVB and the huge widening of the spreads for the senior product, the covered bond was, in comparison to that, relatively stable. It also widened, but relatively fast it tightened again and performed in the market. So that was bulletproof for the product again, and it was a live test that covered bonds are working.
So, talking about covered bonds again. If I remember correctly, most covered bonds were issued with shorter tenors in the first quarter. Is that correct?
That's correct. Most of the covered bonds were in the mid-maturities, especially in the end of the quarter after SVB and Credit Suisse. We have seen that investors and also issuers, of course, were cautious and was not able to test the longer maturities.
But we still made almost 100 billion, and your forecast for the whole year, is that unchanged?
So, my forecast for the whole year is still 160 billion, and the question is why we haven't adjusted our forecast. That has a really simple reason. Because of the central bank policies, we have seen increasing yield environment, and that is harming the housing market. So, mortgage production is nearly overall in the world collapsing, and we think that we will see effects on the market for the rest of the year.
Okay, if I do a little calculation here, that remaining 60 billion for the rest of the year, that equates to about, well, a little bit less than 2 billion per week for the rest of the year. Is that a reasonable assumption?
I think that's reasonable, unfortunately, I have to say, because we were on a good way. But I think the market is not there for a higher issuance volume in covered bonds.
Unless we see a recovery in residential real estate, I suppose.
Exactly.
Okay, good. Now, and what about the other asset classes?
Yeah, also the senior pref market was performing fantastic in January with an issuance volume of close to 30 billion.
That was the best January ever, right?
Completely correct. That we have seen so far. But again, we see a tendency that the issuance volume calmed down for the rest of the quarter, and the market was, especially in senior products, locked after Credit Suisse.
All right. Well, I mean, overall, I think senior pref and non-pref together were even slightly bigger than covereds in that period, right?
That's correct. Our forecast is still on a level of 70 billion for senior prefs for the rest of the year. We see a deteriorating macro environment, and so we tend to say that there is less issuance need than at the beginning of the quarter.
Sounds like something like one trade a week. It's going to be tough for DCM departments.
Yeah, unfortunately.
Right. And the senior non-pref, same story?
Same story. Also the highest issuance volume in January for a while. That calmed also down in February and March. Altogether we have seen nearly a little bit more than 40 billion that was coming to the market. When we compare that with the years before, we see that we are more or less in line on a way to an issuance volume that we think will be somewhere around 80 billion. The reasons are here, the same reasons as we have seen this with senior pref, deteriorating market environment.
Okay, well, so it looks like even though we had already seen the bulk of issuance, in your view at least, for coverage,
Yeah.
covers are going to be the more interesting asset class within the FIC universe for the rest of the year. Good.
Completely
That's
right.
good to know.
So in the SSA market, we have a similar but not the same picture. So the January was impressive. It was nearly on the level that we have seen in 21. For example, the European Union has issued 30 billion. That is a little bit more that we have seen the year before with 26 billion. But overall, the quarter was more or less in line with the quarters that we have seen the years before.
And the outlook is still 300 billion?
The outlook is still 300 billion. Especially 2020, 21 and also 22 were influenced by Corona. So the issuance volume at that time was higher than usual. I think as the impacts from Corona are now calming down, that should lead us to an issuance volume that is lower than after Corona, but still higher than we have seen it the years before Corona.
Well, of course, governments always need money. So basically that translates into roughly 5 billion per week. So the SSA business is going to be thriving without any reluctance for the next few months and probably the rest of the year, as we have shown here. There's one difference between coverts and this segment as well, apart from the volumes that we're expecting. This is mostly playing in the very long end of tenors, right?
Completely correct. For example, the lender segment issuance volume was 20 billion, more or less what we have seen the years before. But this issuance volume was especially impacted by North Rhine-Westphalia. They issued a dual tranche at the beginning of the year, 9 and 30 years, both 2.5 billion. So, and there's a good example that SSA works at the long end of the curve in comparison to coverts and senior.
Yeah, I mean, we've seen in the past also covered bonds going out to 15 and even 20 years. But at the moment, that doesn't seem to be the favorite playing ground for issuers. So, apart from those expectations in the asset class, anything else that we should remind our viewers to what's going to happen, driving volatility going forward?
Yeah. I think the most important impact in the lender segment is the fact that the households are looking now closer to the debt brake and are not issuing as much as we've seen before. That translates in our forecast of 40 billion. The volatility drivers for the markets are similar to that what we have discussed the last time by the end of the year. We still have war in Ukraine. We are really concerned about Taiwan. Inflation is there. That could force the central banks for further rate hikes. On the other hand, we see a deteriorating macro environment. So that should all lead to still high volatility in the market.
Okay, well, there's at least one positive development I'm missing. Well, I'm not really missing it, but it's not there anymore. The COVID name has disappeared. So while that was dominating the volatility drivers for a lot of our outlooks in the last 2 years, that seems to have gone off the table now. What also disappeared, I remember we did worry a little bit about France and Italy not too long ago. At the moment, that doesn't seem to be on investors' mind. The big story is, of course, at the moment, geopolitics and the effect of those on the macro situation more than anything else. America might become a little bit of an issue. I mean, there's this debt ceiling thing. You mentioned the German debt brake, but they have the debt ceiling problem that's not being solved. And of course, Mr. Trump is also beginning to pop up in the headlines again. So lots of fun ahead in the markets, but there's at least one trusted thing we can rely on, our favorite product, which is
covered bonds.
So you get them from us, you get them through us, and we try to give you all the latest developments on those as well. Thank you very much, Matthias. It was a pleasure having you here again. And thank you very much for listening and viewing, and we wish you a good next quarter. Stay healthy. This is Thomas and Matthias from Helaba in Frankfurt. Bye.